Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Whitton and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello, hello. Good morning, everyone. Welcome to Wealth Coffee Chats. 2025 edition, back at it. It's been a good break. Hopefully you're well, folks. Good to see a couple of you on already, out and about. Give us a quick shout in the chat. We're ready to rock and roll. 2025, 2024 done, 2025 ahead of us, folks. When it comes to the world of investing, the world of property, the world of looking after your money, taking care of things. And January, done and dusted. We're 1 month in. We're about to head into February. Thanks for joining me this morning, folks. For anyone who's new, I'll do the quick intros and a quick hello to anyone who's returning. Jason Whitton's my name. If you don't already know that, now you do. There you go. Welcome to Wealth Coffee Chats. We've been doing these Wealth Coffee Chats in the mornings, around about 8:10 each day for a few years now, since COVID actually, since the COVID times, and they've stuck around, been quite useful. We used to get together and try and help property investors and investors alike make a bit of sense of what's going on out there in the marketplace over a coffee in the morning, and we try and sort a bit of fear from fact, get to the bottom of things, because the newspaper, the politicians, the journalists, the newspapers, they don't particularly care too much about you getting to the bottom of things and making good decisions. They just want you to click on things and waste your time and money. So that's not what this show's about. Morning, Jeff. Good to see you, mate. 2025, it's on like Donkey Kong. I don't know. Maybe Jeff and I are old enough to remember Donkey Kong. Maybe some of the youngies might not. Morning, Luke. How are you, mate? Great to see you. Great to have you on, as always. A couple of the regulars. And you're dead right, Jeff. A bit of inflation going on. Thought we might kick off 2025 just having a bit of a chat, a bit of a Wealth Coffee Chat about, hey, what happened in 24 and what we think might happen in 2025. What do you guys reckon? Get involved in the chat if you're there. What's your thoughts about what's coming up in 2025 as we go along? Hey, good morning, Dave. Oh, that's fantastic. Great to have you here on the first live of the year and first live for you, Dave. That's fantastic. Good stuff. Bunty, good morning. Awesome to have you in the house as well. If you are new, like Dave, give us a shout out and get involved.
Thank you for joining. Great to have you on the live this morning. That's for sure. What happened in 2024? What were the big headlines in 2024 for most of us? There was a few that made the most impact. Right, got involved. Number one, interest rates, folks. Interest rates were high. Right, interest rates were high for property investors. Often our mentality, especially if you're in the acquisition phase of your property investing, you're buying serviceability. What did that mean? Serviceability, your ability to service your properties or more debts if you wanted to acquire more, or sometimes your cash flow can be affected when it comes to the world of interest rates. It is the most movable. I was going to say volatile, but it's not necessarily volatile. It's the most movable expense that you have as a property investor. It's your exposure, really, at the end of the day. You know, sometimes those interest rates are a bit lower, sometimes they're a bit higher, and you have to navigate that. We do that with buffers and all sorts of things, but, you know, the big thing in 2024 for property investors was that interest rates were higher than we wanted them to be, really, at the end of the day, weren't they? If you think about it. What else? There was a high inflation and all sorts of stuff like that, that's for sure. But really, at the end of the day, interest rates, it talked about, or it translated into interest rates for us as property investors. What else? What else was going on in 2024? Started in 23. Massive undersupply, okay? Undersupply of new residential real estate, folks. It is the worst construction supply we have ever seen in Australia's history. Now, this is an interesting one because it's a few different ways to look at this, but when you look at it per population, the ratio of properties created and built per million people in Australia, the worst in Australia's history as a ratio, percentage ratio of population to new construction completed. That is a problem. That's a problem. It's a massive problem because with this undersupply, there was a couple of major issues in the world of property, especially brand new property, was construction prices, folks, construction prices. And those construction prices were up. They were high. It cost a lot of money to deliver a piece of real estate. And the challenge for you and I is the pieces of real estate that could get delivered were more expensive than our actual servicing. So serviceability, undersupply was a real issue when it came to the world of property investing, especially brand new properties, that's for sure, as we went along. What else really at the end of the day happened in 2024 that made a massive difference? It was a huge change. Like I said, the construction prices, really at the end of the day, the cost of delivering a bit of real estate. Those are really, for me, the big three things that happened in 2024. There's plenty of other things that happened, that's for sure. Undersupply, worst ever, down. Construction costs up, you know, and that caused a bit of a problem for property investors in 2024. The rents went up moderately. The property values went up moderately, or just started to go a little bit negative at the end of 2024 because the market sentiment started to dwindle a little bit in 2024. Interesting article that came out just recently. I downloaded it the other day. 20,000 property investors over 2024. 20,000 property investor owners sold their investment properties in Melbourne. Now, tell me, folks, does anyone know what the vacancy rate in Melbourne for property investment properties are, or properties in general for rent? It's quite low. It's if you take a look across the whole city, it's about 2%. So 2%. Because of the holding costs, the property investors sold their properties in Melbourne. Now, in the chat, if you're there with me, tell me, when 20,000 property investors leave the market because of affordability, so they sold those investment properties, and we had a massive undersupply, especially in the bottom end of the property market, sort of the sub $800,000 properties. So 20,000 investors got out, bugger all properties got put into the market. What do you think's going to happen? What's going on with our supply chain in Melbourne and many other places as well? But the dynamics are a little bit different. Brisbane and Perth still got quite an undersupply, but property investors by and large aren't selling because it feels a little bit more positive in those places. The rents are a smidgen higher. But what happens? What happens when 20,000 property investors leave and they get sold to the owner-occupiers because there was lots of demand for owner-occupiers, and nothing new has been built? Well, it doesn't take Einstein to work out that it's going to put some pressure on the property rental market, that's for sure. So rents in Melbourne are going to go up. Interesting in that sort of sense. So let's have a look at what we think might happen in 2025. Certainly, I think I saw Jeff there before jumping on the bandwagon. Number one, interest rates going to go down. Interest rates going to go down. That is fantastic. We should all be excited about that. Everyone's usually excited about that. Some of the challenges, though, some of the challenges in interest rates going down, what will that do? I think it's going to unlock. That's not number two, is it? Interest rates are going to go down. Now, there's talk about, interest rates coming down in February. Don't know if that is the case. I think that might be a bit of clickbait and in the media. However, interest rates will go down at least 1%, maybe even a 1.5% by the middle of this year. What will that do? Well, there's been some pent-up demand. Those who haven't been able to purchase have been sitting on the sidelines, or their demand has been built up over 1 or 2 years, at least 2 years, maybe 2.5 years when it comes to, the right type of property, the right type of borrowing power. But there's a fair bit of work to do with this interest rate thing. Now, I was just looking at a servicing. Let's say there's two places, right? We'll just do Melbourne and we'll do Sydney. The servicing difference in a new property, let's say, right? So a new property at the moment in Melbourne, $800,000. Let's say a simple house and land, a new house and land property, and a new house and land property in Sydney, 1.1, I think it was. Let's call it $1.05 million. Let's call it 1.1 mil. All right, pretty chunky when it comes to that. When it comes to that sort of stuff. Now, an average couple on $150,000, if they're making $150K, right? So that's the average borrowing power in Melbourne. Their ability to borrow right now is at $550. $550K. Now, there's a fair gap there, isn't there, when it comes to that stuff. And the average couple in Sydney, for some reason, their borrowing power is a bit better at $650, right? So there's a gap. There's a gap in the ability for people to borrow. Now, to close that gap, you're going to need about 2.5%. About 2.5%. You're going to need a lot of interest rate cuts. So while those interest rate cuts are going to be good, going to be some good relief for a lot of investors, a lot of mortgage holders, a lot of homeowners. I think that's going to we're going to probably need a little bit more when it comes to servicing. There's a few things going on at the moment. 40-year home loans being released, so servicing's not an issue. Talk about changing some of the APRA restrictions when it comes to the risk amount of money put on top. There's usually about 3% put on top of the interest rates, et cetera, right? So, but the big one Everyone's talking about it. You should be thinking about it. We're all thinking about it. Interest rates drop. What's that going to do? Well, it's not going to change the undersupply. The undersupply is going to be here. But an interesting thing is happening because of the undersupply and the construction costs for us as property investors, especially if part of your acquisition strategy is for new properties. The gap between second-hand and new is quite large as well because of the construction. We're going to see, I think this year and next year, we're going to see property prices jump pretty significantly, right? So, let's just call it the new, right? So because of this massive undersupply and the construction cost, the new pricing, price becoming the value, the new valuations, right? Now we've got to get a little bit of market sales into the pipeline. So anything that's new that was sold last year or maybe in 2023 that's coming to fruition now, anything that's being built today or sold or started today, let's say in late 24 and 2025, the difference in pricing is about 30%, folks, about 30%, 20 to 30% just to produce the property. So there's going to be mine and Sam's conversation is there's going to be a pop, like a valuation pop, like a market value pop in certain types of property because there's no other way to bring those types of properties to market at a different price. They're coming to market, people are paying, the banks are lending. Very poor quality property will have valuation issues, but good quality property will pop, and it's going to be really interesting to see those markets reestablish a new pricing, a new price point as we go along. That's going to be pretty interesting, pretty significant. So the new pricing pop, and the third one for me when it comes to our world of property investing, it's really been sneaking up on us. Maybe in the chat, chuck it in the chat. We've got yeah, that's right. There we go. Jeff's in there. Increased borrowing power, ups demand. Yep, ups prices. Vicious cycle. Exactly, Jeff. I prefer like a quite calm market personally. I prefer it to be a little bit steadier so we can just build our portfolios. Big call for 1.5. Yeah, Luke, I reckon they're going to have to do something. But we shall see. We'll see what happens when they come out of the gates. A 0.5 drop straight up or tentative. That'll be an interesting one, won't it? As we go along. So the third one for me is the world of property, especially new property, because that's what we specialize in at Positive. We've done that for 22 years now. The world of newer property, apartments were often, in the past, nearly always, a very cost-effective, let's call it a cost-effective alternative for getting into the market, right? Because what used to happen, and a few of you guys have seen this, we call it the proximity of profit, right? If you want to get closer to something of infrastructure, and I'm just going to call it the CBD, but if you want to get closer to the CBD, and let's say that's 5, 20, and then 40K, right? So if you had, let's say, $800,000 back in my day, this is a while ago, actually not too long ago to be honest. If you had, let's say, a $600,000 budget, you could go out here and buy a house and land 40K away. You could get yourself a townhouse. And then you could get yourself an apartment, okay? So if you wanted to get closer, you had an apartment. You couldn't buy a house with your $600,000 budget near the CBD. That's always going to be the case, right? Often we trade, not always. This is the interesting thing. Often we trade house or asset for location. So you kind of you change. I'm not going to get a house, but I'll get an apartment. I won't be 40K away. I'll be 5K away. Right. That's the kind of trade, right, as you go along. Right now, with this proximity for profit, because the developers just cannot produce property at in these locations, which are expensive land and expensive construction, plus unions and council issues. This kind of trade, if you had an $800,000 budget and try and get close to the city, that's going to be much more difficult, if not impossible, for a good quality property. So that's an interesting one. So the point here, I'll go back and make my point as I finish up our Wealth Coffee Chat this morning. The point is that, for budget shopping, and budget's not the right word, entry shopping or price effective shopping when it comes to your world of property investing, let's say you've got a $700,000 to $800,000 buying power budget. Well, you're actually going to be that's going to be a house and land. It's going to be more difficult to get a good quality apartment or townhouse for that than it will be a nice house and land on the fringe of a good city. For me right now, that one is Melbourne every day of the week. I'm very bullish on Melbourne. Lots of people aren't, because they're too short term, way too short term. Melbourne's on sale right now. It's the cheapest capital city in Australia to be buying in. It's had positive population growth, et cetera, et cetera. And listen, I like Brisbane. Sydney, I think, is going to be some good buying opportunities as well. But Melbourne's my pick for the moment. Anyway, there you go. Jeff, there's Luke. That'd be handy, wouldn't it, Luke? Increase the cash flow by 30K. Well, there you go, folks. A couple of quick points about this year coming up. There's probably plenty of others, but I think they're going to be the big impacts when it comes to our property investing. Interest rates down. Undersupply is going to be still here. Construction costs are still going to be high. What's that going to mean? We're going to get our new property price push. You're going to get demand from those people who've been sitting on the fence for a while. Their servicing comes back into play and they've been sitting around. And you're going to get opportunities in the world of housing, houses compared to apartments and townhouses, which were often an entry opportunity or a good quality budget opportunity when it came to investing. I think they're going to be some big drivers. Plenty of other things. Rents are going up. Population's still growing fairly well. Labour shortages, you name it. Those things are all still on the cards. It's all still happening. We've got a bit of build to rent coming into the market, but that's not going to make too much of an issue. It's probably going to adjust some student accommodation stuff, but really not going to make that much of an impact, to be quite honest. It's going to make an impact because it's taking supply out of the market. That's what it's doing, under supply. Anyway, folks, join us again tomorrow for another Wealth Coffee Chat. We are back at it 5 days a week, 10 past 8 each day for the Wealth Coffee Chats. And as always, a few of the team will be up doing Wealth Coffee Chats as well. We've been mixing and matching it, which is great, I think, to get different people up and at it. And tomorrow you'll have Cass from the property management team, and he'll talk about what's happening in 2025 for property management as we go along. All right, team, that's it from me. Great to see a bunch of you up and at it as well. Thanks for joining me this morning. And that's it from me. Take care. Wealth Coffee Chat done and dusted. Bye for now, folks. See ya.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episode